Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good to have you back on. Thanks for making time today.
Happy to be here.
Well, last month we saw inflation in the U.S. rise to above 4%. The Fed still saying, though, clearly that it's going to stick with monetary easing. But some in the market aren't so sure about that. They think conditions could force the Fed to start tapering its bond buying sooner. What do you make of the situation, Professor?
Okay, well, the U.S. personal consumption expenditure price indices for April came out last week. The reason that this personal consumption expenditure price indices are so important, perhaps even more than the consumer price index, is that this is the Fed's preferred measure of inflation. So this is what the Fed sees when it tries to determine whether the economy is overheating or not. And if you look at the April figures, looking at 12-month change, the personal consumption expenditure price index rose by 36%, and for the core, which excludes food and energy prices, it rose by 3.1%, which is a considerable increase from March, which was 2.4% for overall, 1.9% for the core. Now, the core was expected to rise by 2.9%, so this has caught analysts somewhat by surprise, but perhaps not as much because the consumer price index inflation caught people in a surprise as well. But this number may be misleading because part of the high growth is that you're measuring changes over 12 months, and 12 months ago it was March and April 2020 when the coronavirus first hit the global economy. So in the U.S. they had a deflation for March and April, minus 0.2% and minus 0.5%. But if you look at the monthly figures, the price increase for each month, just month to month, is increasing from January to April. It was 0.3% in January, but it has steadily risen to 0.6%. And most of the changes in prices have taken place through durable goods rather than non-durable goods. Services have risen somewhat as well, but still, durable goods have risen 1.4% month to month in April, and this is causing great worries among some analysts. Now, there has been some speculation on whether the Fed will raise the interest rates, but nearly half the year is over already, and right now the consensus seems to be that the Fed has promised that they will not raise the rates this year, and they'll do everything they can to to keep that promise of not raising the interest rates. But tapering is still fair game. They never promised that they will not stop or slow tapering this year. They only said that they will give ample signal when they start to slow down tapering or stop tapering. And when the minutes of the April 27th, 28th Fed meeting was revealed earlier last week, they did mention that they're putting the possibility of tapering earlier than planned, sometime within this year, on the table. So tapering is certainly possible, but because they said that they will give ample warning, they will probably not taper in the third quarter. If they are going to start tapering this year, it'll probably be in the fourth quarter.
Right, got it. We'll have to keep our eyes on that, and of course we will. And Professor, let's turn to the market. Stocks on Wall Street ended higher last week. Right now, the S&P is sitting right where it was about a month ago. The U.S. markets will be closed, of course, on Monday for Memorial Day, but catch us up on the global markets as we start the week.
Okay, well, for the week, the S&P rose by 1.1%, Dow's up 0.9%, NASDAQ by 2.1%. This is the fourth month that the Dow and S&P rose, but NASDAQ for the month fell slightly. This is the first negative month that they had in 7 months. Even though the higher inflation figures were revealed last week and the week before, this market seemed to have sort of taken it in stride, especially when the high personal consumption expenditure inflation figures were revealed. That's probably because the market, after seeing the surprise on the CPI inflation considered it, and it's in the expectations of the market already. For the European markets, CAC and DAX rose last week, but FTSE was level. Asia, Nikkei was up last week, but down today. Shanghai was roughly level since Thursday. Hang Seng was up last week, but down today.
Well, here in Korea, of course, it's the last trading day of the month of May, and today the market seemed to lack direction earlier in the session, but then both the Kospi and the Kosdaq closed higher by almost 0.5%. Tell us about the local markets.
Okay, well, as you mentioned, Kospi was fluttering around losses and gains until 2 p.m. when they started to really rally at the end of the day. It ended today at 3,200, 3.92. This is the first time in 20 days that the market ended above 3,200. Foreigners and individuals bought and institutions sold. Kosdaq was in the gain territory all day long, but it did lose a little bit of momentum toward the end. It ended today at 981.78. Again, foreigners and individuals bought, institutions sold. Now, the April production numbers, they showed that semiconductor production fell substantially. That was a bit of a surprise because exports for semiconductors in April and May increased, and the fall in semiconductor production numbers in April were cut, I think, people by a bit of a surprise. But strangely enough, Samsung Electronics and SK Hynix stock prices rose today.
Interesting indeed. All right, Professor, we're up against the clock. We'll have to leave it there for today. Thank you so much for sharing your insights with us. We always appreciate it.
Thank you.